Hello, good day. So our topic for today is general journal. Remember, we already finished our special journal. So now let's take a look with its original, the general journal. So general journal, this refers to the book of original entry. So why original entry? Because a sales invoice would be first recorded in a journal. Then from the journal, it would be recorded to our ledger. Hence, journals are called original entry while ledger are called the final entry, which accountant and bookkeeper record business transaction in order. So meaning it is recorded chronologically in the date of its occurrence or chronologically by date of the transactions. So however, due to the existence of specialized journal, only the following transactions are recorded in this journal. Why? Take note that all our sales that are payable or on account or on credit are recorded in our sales journal, whereas our purchases that are on account or on credit are recorded on our purchase journal, whereas cash flows are recorded in our cash receipts or cash disbursement journal. Hence, only this one are recorded in this particular book. So number one is the opening of stock. Why? Because opening of stock would normally is not a payable and no cash receipts until you are already issued these particular stocks. Next is the transaction relating to the adjustment entries. If you are not be able to put the account or the numbers or the value of the in our specialized journal, an accounting error. So the major source of this journal, if sales invoice or official receipts, for purchases it could be charge invoice, and for our disbursement is usually invoice also. For this one, it's a journal voucher. So the journal voucher is the primary source to entry for this general journal, and a copy of management report and invoices. So how do it look like? It look like this: date, then we have the details or particular wherein we put the different accounts or the affected account, the folio, still our reference so that we would know if this particular entry are already posted in our ledger, and then still have the debit and credit that should always still be balanced. So let's take a look of our sample transaction opening stocks. So we have January 18, KKR Company authorized to issue 500,000 ordinary shares divided into 5,000 shares with a par value of 100. So this one could be either in memo entry or journal entry. So a memo entry don't have as an account. It's usually a narrative information of what has been authorized to us for the particular stocks. And the journal entry would just be the same entry that we had. So let's take a look of our entry for memo entry and journal entry. So for memo entry, it look like this. On January 18, 2020, memo entry, it's a narrative. We just copy what has been stated in the problem. The company was authorized to issue 500,000 shares divided into 5,000 shares with a par value of 100 to authorize the share. How about our journal entry? Journal entry would be an issued ordinary share, 500,000, and then authorized ordinary share, 500,000 to record the authorized shares. So see, and we just put this on the T account. It has no effect because ordinary, unissued, and authorized would have the same ledger to make that 0. And the narrative, we just put it so that we would have to determine how many number of shares has been already issued to the stockholders. Okay? So sample of adjusting entry. So on December 31, 2020, KKR is to record depreciation for computer bought for 25,000 in January 1 with a scrap value of 1,000 and a useful life of 2 years. So pre-computed depreciation was 12,000 per year. And December 31, 2020, salary of car for December 21 to 31, 2020, amounting to 10,000 to be paid on January 5 cut-off. So our entry would now be debit depreciation expense computer 12,000, accumulated depreciation computer 12,000 to record depreciation. See, if you see for this particular one, there's no payable, there is no cash transactions. Okay? And then for the salaries, we have salaries expense 12,000 and salaries payable 12,000. Why do we have to record this one on our general journal and not on our purchase journal? Because take note, at the end of the year, if you will do the reversing entry, this would also have no effect because you have to change that. Okay? Take note, general journal are also used for our reversing entries. Okay. Next is the sample transaction for our accounting error. Suppose goods sold to Mr. K amounted to 5,000 was posted to the debit side of K account for with only 500. While Mr. R, payment of 5,000 was wrongly credited to Mr. R accounts as 500. So what does the entry made for both? So we debit the account of Mr. K, accounts receivable Mr. K only 500 and sale was correct. Whereas for Mr. R, cash was 5,000, correct, it was not stated in the problem. And then accounts receivable for Mr. R, only 500. So if you put the debit and credit are still balanced. But if you further analyze or the auditor would be able to analyze this one, they will see that there is an error if you do the tracing and the vouching. So now let's see, we already know what is the entry being made. And we now need to know what is the should be entry. So the entry made was this one, which we have previously discussed. And then the entry should be made is what? To correct accounts receivable Mr. K, 5,000 and sales 5,000. And cash, 5,000 and accounts receivable Mr. R, 5,000. So this is the should be entry. So when we do the adjusting entry, it should be like this. Accounts receivable Mr. K, 4,500 and accounts receivable Mr. C, 4. Mr. R, 4,500. Okay? So this is now our correcting entry, which we are now usually document in our general journal. Okay? So, do you have any question? Just comment and I'll get back to you. Or you could also attend our premiere so that I could be able to keep in touch and talk to you in person. And if you like this video, please help me reach out more people by hitting the subscribe and the like button below. God bless you. And I hope you had something learned in my video. Bye!